A shocking $130 million price tag is now looming for National Australia Bank, NAB, after revelations that it underpaid employees yet again. This isn't just a number on a spreadsheet. It's a glaring reminder of how even the biggest financial institutions can stumble in their most basic responsibilities. But here's where it gets controversial. Despite a 5-year-old payroll review that already cost $250 million, the problems keep resurfacing. How does a bank with such resources repeatedly fail its own staff? Let's break it down. NAB has admitted that its operating expenses for the 2025 financial year will jump by 4.5% due to the cost of fixing these payroll errors. The bank describes the situation as an ongoing review and remediation, but the total financial fallout remains a mystery. This isn't just about correcting mistakes, it's about rebuilding trust. As CEO Andrew Irvine put it, the costs are disappointing, and the issue must be fixed. Yet, with over $400 million already provisioned for similar issues in the past 5 years, critics are asking, when will this cycle end? Sarah White, NAB's People and Culture Executive, called paying colleagues correctly a priority. But words ring hollow when the union, Finance Sector Union, FSU, calls the underpayment systemic wage theft. Wendy Streets, FSU's national president, argues that this isn't a technical glitch, but a pattern of negligence. Especially during a cost of living crisis that's crushing everyday Australians. This money should never have been taken in the first place, she insists. And here's the kicker. NAB hasn't disclosed how many employees were affected. The review covers Australian-based staff and even those overseas, but the human cost remains obscured. Meanwhile, NAB's quarterly cash earnings dipped by 1% to $1.77 billion. A small but notable decline in the face of mounting expenses. CEO Irvine remains optimistic, touting 4% growth in business and private banking and 2% in home lending. Yet, with a $130 million black eye and a union demanding accountability, can that optimism hold? The bank has enlisted the Fair Work Ombudsman and FSU for support. But transparency remains patchy. And this is the part most people miss. The ripple effects of these errors extend beyond financial statements. Employees face uncertainty, the bank's reputation takes a hit, and the public's trust erodes. A crisis no CEO can spin with a smile. So where do we go from here? The FSU is pushing for an immediate apology and a detailed explanation of how these errors occurred. NAB's share price has risen slightly to $39.98. But will that momentum last if the payroll issues don't get resolved? We'd love to hear your thoughts. Is this just a case of corporate mismanagement? Or does it reflect deeper systemic issues in how big banks handle their workforce? Drop your comments below and let's spark a conversation that goes beyond the headlines.